So is the August sell-off over, or is there more pain to come with so much uncertainty still looming? Mike Vogelzang is the president and CIO of Boston Advisors. Matt Roddy is VP and portfolio manager with Rockland Trust, joining us both here. Mike, at this point, it's a mug's game to try and figure out what's going to happen day to day, even hour to hour, based on headlines. We got more earnings from retailers coming out this week. But in general, how do you view the market right now?
I hate to play a mugs game, Bill. That's all I know. Look, I think it's reasonable, and the data is telling us to be a little more cautious as we head into the second half of the year, or sort of the fall season. There's no question the economy is beginning to slow down a little bit. Some of the bites from Europe and China are slowing things down a little. We've been very, very bullish all year to a great extent, and we're coming off that a little bit right now. So I don't think it's a huge change, just a little bit less at the margin.
Yeah. Matt, what do you think?
Yeah, I would agree. I mean, we've had this tremendous run up here this year, and at this point, I think it's maybe time to think about doing some profit taking. I mean, the central banks around the globe are going to try and fight against this slowdown that everyone's so worried about, so that's going to help. But that's going to be there'll be some volatility trading between the tariffs on the one hand and the central banks trying to fight it off on the other hand. So I think it'd be reasonable to take profits and put on the safe side of the portfolio for now.
Mike, how do you account for all the volatility that we've seen? I mean, I was here on Wednesday for one of the worst days of the year. I was away Thursday, Friday. I came back today, and it's like nothing happened.
Ho hum.
Yeah,
exactly. So in terms of all the prognostications of bond yields going down to 132 and possibly below 1% or even to zero, I mean, what do you make of all that, and what is the message to investors at this point?
I think what happens is when you're starting to get consensus that the underlying fundamentals in the economy are beginning to change, even at the margin, you start to get portfolio rotation, right? And I think with big portfolio rotation, you start to see more volatility. We've had this really bipolar sense of, as you pointed out, Wednesday we had this big risk-off day. Thursday, Friday, big risk on. Again, today we had big risk on. To me, that's what's going on when people are uncertain about the future and they're starting to change their opinion. You just heard Matt and me both say we're beginning to sort of edge at the margin a little more conservatively. I think that's what's going on. I just think it's not as clear cut as it used to be.
Is tech conservative in your view? I mean, that's one area that you're still strong on. You feel strongly about.
Yeah, we like earnings growth. We like revenue growth. We like good, positive, strong cash flow. And it's hard to disrupt the leaders in this economy right now. The market is just being dominated by a relatively select group of really, really strong and well-run companies, and hard to bet against them at this stage.
And Matt, you're playing defense in that you like the utilities and the telecom. So are you among those who see interest rates going much lower from here?
No, I honestly, I wouldn't make a prediction on interest rates other than say I feel like they have run down so much so quickly that there might be a little bit of a move back, which we've seen over the last couple of days, as maybe people see some of optimism out of the stimulus packages that are going to be rolled out and the rate cuts and what China's doing with some of their some of their lending programs. So playing defense is not a bad thing here. Bond proxies, as bond investors look for other places to put their money, they're going to look at those telecoms and those utilities, which are domestic, don't have to worry too much about the tariffs and taxes, and can make those, kind of maybe some safe places to put money. And I would kind of be a little bit more cautious than Mike on the technology and global industrials, just because, you just don't know which way things are going to swing when it comes to these tariffs and trade wars. It's sort of like that game with the maze when you were a kid with the ball, and you never know where you're going to fall into a hole. The landscape's shifting too quickly, so that it gets complicated for those companies to commit.
Before we let you go, Mike, your list of likes includes Walgreens, Lam Research, Booz Allen, and Starbucks. That's quite an array there. Is there a theme to this?
There's two themes. One is sort of deeper value. Walgreens and Lam Research we think are really strong value candidates, particularly Walgreens. It's just a matter of waiting till that cycle works, and then you're going to make some money there. The other two are really sort of market leaders, right? Booz Allen and Starbucks have done really, really well this year. They're sort of close to their all-time highs, and it's just really hitting all cylinders in the business. So we try to look for two things. One that are really working and they're expensive, a couple that haven't been working quite as well and are give you a little more value.
Mike Vogelzang, Matt Roddy, both with their finger to the wind right now. Thank you both for joining us.